All right. Then we're gonna go ahead and go over the SPY analysis here on the daily time frame. So this is gonna be our price action analysis for the next coming week. So as you can see, we are still continuing this prolonged uptrend channel on the daily time frame. On last week's analysis, we did mention on our bullish case that as long as buyers continue to hold above the 20 SMA line, we will anticipate a higher low structure to form on the daily and an expansion away from the 20 SMA line. And as you can see, we had that retest of this basically spinning bottom candlestick, and now we basically followed up with a gap up the next day. The candle on Monday's candle was a bit tricky, um, but as you can see, buyers stepped in. They didn't fill the gap here where they were so close to fill a gap at 509.75. Buyers stepped in ahead of time and created this bullish engulfing candlestick. And as you can see, we had a breakout off of this zone resistance at 517.32. Once we broke that level, we head towards new all-time highs. We had a further upside expansion from there away from the 20 SMA line. And as you can see, we are seeing a short-term pullback here on the daily time frame on SPY. Um, so I'm going to go ahead and go over the hourly time frame here. Let me just fix my chart real quickly. Okay, so on the hourly time frame perspective, as you can see, we had a zone breakout. We had a breakout candle followed by a gap up the next day after that towards a new all-time high at 524.11. From there, we did see a pullback or retracement, and we are currently we have a gap at 520.41, which has not been filled yet. So far, we are still consolidating above that gap, and we haven't seen any further confirmation to fill that gap yet, but we are definitely close to that gap. As you can see on this perspective right here, on the previous breakout on inside of this zone, we also did um, pretty much similar um, price action. So we had a gap up, and as you can see, we had a retracement. We were so close to the gap fill, but we didn't fill that gap. And as you can see, we had for new all-time highs from there. Now, what I'm watching for the next coming week is as long as buyers create a higher low structure inside of this newly formed uptrend here on the hourly time frame. So I'm gonna go ahead and try to, so I don't confuse you here with all the lines clustered up here. Sorry, give me a moment, team. Okay, so this is basically what I'm talking about. This is the newly uptrend channel that I'm talking about here on the hourly time frame. So we had a first retest, second retest, which establishes this resistance of this uptrend channel. We have the first retest of support, second retest, and now we are nearing the third retest of this rising trend line support, which is right in the confluence of the gap fill and at the 20 SMA line support. Now, as long as bulls continue to hold this level, or buyers continue to hold above 520 within the next coming week, then we are anticipating a further upside from there towards retesting 524 all-time highs to 525.24 and potentially retest this rising trendline resistance, which is right around 527, 526 area. So that's my bullish case on the SPY. Now, if we lose support below 520, that signifies weakness within this trend, and we may see a further pullback towards this level right here at 518.28, which was the previous all-time highs. And if we do see further weakness below it, we're headed for a retest off of this resistance level that was broken out at 517.32, which is more of like a break and retest strategy. If buyers do come in or step in at that level. So we have a breakout, we have a potential retest at this level at 517.32. If buyers do step in there, that's a potential buy opportunity for a backtest strategy buy opportunity. So that's what I'm watching. As far as for a bearish case scenario, what I'd like to see is I'd like to be cautious if we do create a lower high structure below 522 area right here. If we don't,
right now.
okay, so below 522, 0.40 or 54 area, um, if we do create a lower high structure or continue to make lower high structure from here, then I would anticipate further pullback towards back inside of this zone, which is right around 515 area, 512 or 511, and then finally fill this gap right here at 509.75 and retest the zone support, which is right at 508.31. So that's what I'm watching as far as for the bear case scenario if we lose 520 early in the week. So yes, that's what I'm watching as far as for the SPY. I'm gonna also make sure to post my analysis here if hopefully the team get my analysis. Let me see. Okay, so far I don't see any questions. Yes, that's right, Chris. I do definitely see that potential bull flag pattern there on the SPY as well. So definitely going to be interesting how we react to 520 level, and we'll decide where we're headed from there within the next coming week. So far, as you can see, futures is still holding above that level. We haven't really filled that gap yet. So definitely going to be interesting how it's going to pan out next week. Whether we continue into this trend or we're gonna see a correction towards the retest of this support, a major support level on the daily, which is around 509 or 510 range to 508. So and I did mention this. I do want to also just mention it one more time. So we have a potential newly trend or uptrend channel here on the hourly time frame that I'm also watching. So if we do establish that third retest higher low support above 520 here at this 20 SMA line support, then we're headed for further higher high structure from here and continue this uptrend channel on the hourly time frame. Um, yeah, so that's what I'm watching as far as um, headed for next week. Okay, I'm gonna go over a few stocks also on my watch list. Okay, so I'm gonna go over Snapchat because I'm really liking this setup so far. I think this stock is very oversold at this level. Um, So we're basically, as you can see, trading inside of this newly formed uptrend here on the daily time frame. And the reason why I say it's newly formed is because we have third touches on the upper trend line resistance, and we have two touches so far on the daily trend line support, which has not been fully confirmed. But yeah, that's why I mean the second touches basically establishes the trend line support, and the third confirms it. So far, we are at the second touch here of the trend line or daily trend line support for Snapchat. Um, I'm watching for long opportunity here for shares. If we can create a higher low structure here above this level at $11 to $12 range for Snapchat. We have a quite a big gap to fill here from earnings drop. So they dropped from 17.40 to basically they dropped to $12 to $11 from there. And as you can see, we have been just consolidating here or trying to see if we could. It kind of looks more of like accumulation here if we can confirm this second touch here of this rising trend line support. And if I do zoom in, it does kind of look like a inverted head and shoulder, inverse head and shoulder here on the daily time frame. And we have that resistance right at, sorry team if it's a little messy, but we have that resistance right at 12.43. Um, and our confirmation breakout will be at 12.35, 12.40 area at above the 100 SMA line support on the daily time frame. Once we get above it, I think we are going to head towards 14.30, retest this previous support at 15.30, and potentially fill this gap right here at 17.40 area for Snapchat. And also, I want to point out right here, as you can see on the first touch from this rising trend line support, we actually also had a inverted head and shoulder here on the daily time frame. So as you can see, we did touch the upper trend line resistance from there. So I think this is a good potential long opportunity here if we can establish further structure on this second retest. Yeah, team. So I'm gonna go ahead and also add Snapchat for a long opportunity. And the other one that I'm watching for a bullish momentum play is gonna be Amazon. So Amazon here on the daily time frame, as you can see, we have uh, we're setting up for a potential ascending triangle breakout here on the daily time frame. This will be a momentum trade above 178 area to 180, with our confirmation breaking this tail here at 181.38. Once that is breaking out, I think we can head for a squeeze operation um, towards 185 level, 185 level, 188, and potentially replace new all-time highs above 200. So the contract I'm watching for this one is going to be for a swing trade for 2 to 3 week swing. It's going to be the 200 June 21st call. Um, with our stop loss is going to be below 175. So our stop loss is going to be below 175 as an aggressive stop loss. But if we want to do a conservative stop loss, our stop loss is going to be right at the zone support. It's at 171.84 for Amazon. I think this one is going to be a good momentum play. As you can see, the TTM squeeze did not fire to the downside. Instead, we did transition into solid green bars to the upside. So once we confirm that breakout here above 188.44, I think this can be headed towards new all-time highs here for Amazon. All right. Yeah, so far those are the stocks on my watch list. I don't really have much, but if I do find a good setup within the week, then I'll share it on our market analysis or weekly watch list. All right, Body, I'm gonna go ahead and hand it to you. I'm gonna stop my share. Okay.
All right, all right, all right. Good afternoon, good afternoon, good afternoon, team. Hope you're all having a wonderful Sunday so far. Thank you so much for the analysis, Rain Bond. So far, we have about the same. I also have about the same stocks on my watch list, and also looking at the same levels within the market. All right, team. Let me go ahead and share my screen. All right, there we go. Okay, team. I was looking at GCT. One of our team just requested I look at it, but the thing looks so bad. I'm not sure what's going on, to be honest. Um, but team, here we are. We're gonna start with QQQ. I'm looking at QQQ here on the daily time frame. So far, just as Rainbond mentioned, within the S&P 500, we are also in a bullish channel on QQQ as well, which is Nasdaq. QQQ is mostly made up of technology stocks. Let's take a look. So I actually I've been gathering information, and I've been sharing. Let me see if I can find it, team. Give me one moment, please. All right, so here we are. Let's take a look. So um, there we go. This is Nasdaq here, and here are the list of sectors within Nasdaq. So technology sector is 55%, you guys. And what is technology sector? Technology sector is XLK. So XLK, this one right here, and technology sector so far is looking to consolidate, and it is gaining a lot of volume, as we can see, consecutive buyers there. And so far, we are near this resistance level here. We actually broke this bull flag here. We were consolidating inside of this bull flag, and we broke out. And so far, we have been turning this resistance level into support. And we were just unable to push on Friday session. Now, heading into Monday and Tuesday, if we do, let's say, come back up with a green candle back up towards anywhere around 210, anywhere above 210.81, then I'm going to expect 211.98 to be broken out and triggering an expansion on XLK, which is driven by technology. So the stocks that are in XLK are Microsoft, Apple, Nvidia. Microsoft's 24%, Apple's 19%. What's wild is Apple used to be 27% just about a couple of months ago. Nvidia starting to gain market share at 4.6%, AVGO at 4.5%, CRM at 3%, and AMD is sitting at 2.9%. So just about 2 weeks ago, AMD was actually above both of these stocks. So it's going to be interesting how this stock is going to rotate back up, especially with the China news. Now, team, I do want to say that I have experienced this news coming in, and I remember Nvidia got it, but eventually this is nothing short of opportunity for the longer term investors, because a lot of times these bans are temporary, and that doesn't really affect the stock too much. So I think AMD is going to be an amazing opportunity, and if we get a chance to let's say buy anywhere around 170, that'll be great. We will add another contract. We will add instead of, let's say, buying June or July or even September, we will buy a much further out expiration, give ourselves plenty of time, and while focusing on the recovery for the June expiration, we will greatly profit from the second contract that we bought that was a longer term expiration. So honest to God, you guys, I'm still a bull on AMD, and I'll show you more later when we cover AMD. But for now, this is the XLK sector, which is part of Nasdaq, and this is looking like we might potentially see more upside. The signs are green, but I think the uncertainty in the markets, especially at these elevated levels, makes things a bit scary. But in the price action picture within the supply and demand dynamics, it looks like bulls are breaking above resistance at 446, and they're going to be heading for another expansion up. We can see we have been going from the bottom of here, which is when it was established, to retesting resistance, coming back up here, retesting support, establishing support, then coming back up here, confirming the resistance line. So now it's confirmed the bullish channel. We come back up further, confirm now. This is a confirmation of that bullish channel. And yeah, so we came back up a little bit. We have been creating this wiggle room, and I think this is going to lead to more upside. We have been seeing volume accumulation, and I believe as soon as we break above 446.40, this is going to see more upside. Now, team, I do want to mention that if we don't see more upside and we start to see some weakness heading into Monday and Tuesday, where we start to sell off and we lose the 20 EMA line at 440, this will be a clear signal that we are heading towards 434. And once 434 is lost, we head towards the gap fill at 425. So I would say we can start building, or we can start opening a short position, a bearish position on QQQ the moment it goes down to 442. So below 442, that's our signal to enter a short position, reaping the benefits of the short-term pullback towards 434.02 and then 421.58. Now, team, here's why I say that. This right here is more of an aggressive bull case scenario, right? Because bulls are in control, and as long as bulls are in control and they continue to take out the resistance levels, there's nothing we can do but be long, expecting more upside to come. The trend still continues, and so far we have this bullish channel that I believe could continue as far as April and maybe even much further out. Maybe even into November, where we could just grind higher like that. And um, I don't want to get ahead. I don't want to predict the future, but I do want to share this opportunity with you, team. If we do come back down to, let's say, 421 area, this would further create even a bigger digestion zone, as Rainbond mentioned, and that would be an amazing opportunity of a bull flag formation. So do we see how this can turn into a bull flag even if we pull back, team? So even if, let's say, the market pulls back here and we go from 446 to 421 on QQQ, and we come back down to 421.50 area, that's still an amazing opportunity, because this would create this rally base. So this would create a bull flag formation. This bull flag formation would then send QQQ as far as, I would say, even 490 to 500 heading into the future. So if this does happen, please be ready for this opportunity. So the way that I would expect our team to trade heading into the coming weeks is, don't revenge trade, and don't uh, um, what you guys, you know, that mentality where we would basically we would go to war with, let's say, a certain stock, or like a certain bad contract, and we would get tunnel visioned into that trade. It's not the time to take that risk right now. What we would want to do is, and I will give you an example with AMD, because I feel like AMD may suck a lot of traders in doing that if the stock goes down lower. Now, I'm not saying it will go down lower, but because of the past experiences, we will not be averaging down crazy tunnel visioning on the July or the June expirations. Instead, we will focus on the longer term. And basically, it's a great strategy, you guys. Instead of, let's say, instead of us averaging down on something that's going to be an uphill battle, like a June expiration, we will buy a much longer expiration. And if anything, we will just let our June expiration recover while we benefit on that other contract that is much longer term and much better. But yeah, team, just heading into the next couple of weeks, try to take it easy. Try to, if you are wrong with one of the stocks, try to stay away from it, so that you can wait it out for better opportunities like that, and take advantage of, because right now the way the liquidity is from here is going to be much different if we came down, retested this level, and came back up. we would be much stronger. There would be new buyers, and it would be an entire different market. So if that opportunity does happen, we want to be ready for it. But so far, team, don't get mistaken. Bulls are in control, and so far, we have pretty much we have broken this particular resistance line here at 440, and we are at the gate of this resistance line here. So as long as bulls get above 446.40 tomorrow, they can continue to push higher towards 449 with the confirmation of this level here at 448.78, that they are going to push higher more and more and more. Where do I think this movement will come from? I do have, I believe that NVIDIA will be one of them that can possibly get that momentum. We can see NVIDIA has an amazing breakout setup, and it looks like this is going to trigger an expansion towards 974 next, and possibly 1,000 by May 17, before or just heading into their earnings report. So I think Nvidia will be one of the stocks that will push QQQ higher. Now, looking at Tesla, and I hate to say that because Tesla's been such a mess, but Tesla's not looking bad here. So if they start to see some upside, this could also bring in some gains for QQQ. Now, most importantly, I think Microsoft will be one that will move the Dow Jones as well. Microsoft, despite being at these elevated levels, you guys know we recognized Microsoft's momentum around this level at 412, and now it's trading at 430. Still looks like we have momentum for the stock to continue and push higher. It's not at a level where I'm really comfortable to trade, but at the same time, I am watching it to see if it is going to continue to have strength so that I can take advantage of the overall market movement, where we can benefit from the stocks. Let's say with a QQQ day trade. So that's one way to utilize this sort of strength, or we can pretty much go on with whatever stocks that are showing strength, that are outperforming the markets, that are going to outperform the markets even more, now that certain stocks would be showing strength. So in this case, Nvidia would be one to really outperform the markets. Um, I'm also looking at Amazon here on my watch list, you guys. Amazon is another one that Rainbond shared, and I love this setup, you guys. So when she shared this one with Rogelio and I really like this setup, you guys. This is a great one. So um, I will be watching Amazon here for pretty much for strength here, and I'm looking to benefit from a breakout above 179.45, where I will enter the trade and then remain in the trade once we break above 181.42. I will be expecting an expansion just because we consolidated very well here, and again, we are inside of this bullish channel. So the fact that we are inside of this bullish channel, here's what's happening. We are retesting the top of the channel, and then we are consolidating until we get close to the bottom of the channel, creating a lot of wiggle room. And then we get another expansion away from pretty much away from the support, from the bottom of the bullish channel to the top of the bullish channel. Then we come back down, or we cool off, we digest here, creating more wiggle room. And now it looks like bulls are going to step in and try to get some big green expansion candles again. So that's something that I'm expecting on Amazon. And team, to confirm this, to confirm the strength here, I went and I looked at all of the SPDR sectors, which is the S&P 500 sectors of the economy, and I'm looking at XLY, and XLY compared to all of the other sectors is really showing strength. If we look at the daily time frame, it looks like bulls still have a lot of fuel there, despite this big gap down. So I will be watching this potential cup and handle on this sector here. And yeah, I think what will push it higher, one of the ones are Amazon. If we look at XOY, let's see what percentage is Amazon. Amazon's 22% of this sector of XLY, which is consumer discretionaries, with Tesla at 12%, HD at 10%. Wow, HD's catching up. And then we got McDonald's and Lowe's. So some of these stocks actually look good. Like I was looking at McDonald's. I've been watching McDonald's here at these lows. I wanted to buy it around here, but I wasn't yet entirely sure. But yeah, that's one of the stocks that I'm watching. Not fully confident about this setup, team, but let's see what happens. HD has been going up a lot. We shared this expansion just as we were around here, and team, we are expecting the same thing. Just like how this level here saw a nice expansion, we're expecting something similar to happen on Amazon here, where we will get an expansion towards its all-time high here at 188. Um, Amazon has had three consecutive great earnings in a row, and actually four consecutive great earnings in a row. And if they get another great earnings result, I think this will see all-time highs and a squeeze above all-time highs, pretty much. Um, so far, we have covered Amazon, we have covered Nvidia, and we covered Microsoft as well. The reason why we're looking at Microsoft is so that we can see where this what the strength of the market is. Um, let's see, let's go back to SPY here, team. So what am I looking at for the weekly time frame? Now I know that the daily time frames look very choppy, right? The daily time frames look choppy, but if we look at the weekly time frame, the weekly time frame still looks like bulls are getting the overwhelming breakout above the resistance level. So we saw it here. We saw some consolidation, a cool off here from pretty much from December to January. It lasted about 4 to 5 candles, and now we are seeing it again. We saw it again over the last 5 weeks. We consolidated here, and bulls finally had a breakout candle in the prior week where we broke above 517.09 and placed new all-time highs. Considering that this is a breakout, team, we can potentially push higher. And the way that you can trade this setup here is as long as you see bulls get above, and you can write this level down too. uh, every time, team, here's how you can trade the following week, every single week. Okay, you draw a resistance line above whatever the body candle, whatever the close. So you see how the close on Friday was 521.21. That 521.21 is that body candle right there. So go ahead and draw a resistance line there. Draw a line, and the reason you're drawing that line is so that heading into Monday session, you will wait for a digestion above that level where you are seeing bulls overwhelming bears on the 5 minute intraday time frame. And if you see that, you are going to enter for a confirmation to remain in the trade above 524.04, which is the wick, the wick, pretty much the high of that weekly wick. And this will keep you running over and over with more and more and more upside to go. So if I you see how I drew that line on the weekly time frame, and you can see it very clearly on this chart here. So what am I saying here, team? I'm saying that if SPY does end up going let's say for the gap really fast at 520, or even goes for this smart money concept at 519 area somehow, one way or another, and then establishes support at 519.20. If they do print a bullish engulfing candle, then maybe we will get back in, anticipating a blow off the bottom scenario where bulls will just come back up, fill the gap here, and regain the support level. If they regain the support level, as I mentioned on that weekly time frame, once they get back above 521.35, if you even if you don't trade it when it comes down to this potential support level, what you can do is you can just enter here once they digest really well, and just pretty much trade the breakout of these levels. So first, you trade the break of this level at 522.56, and with your target at 524.003. So once they break this, then you would expect more upside. So far, team, do you see how I trade on a week-to-week basis, and also use that on the 5 minute time frame for intraday trading? If you are still new, that's perfectly fine. You can continue to absorb, and even if you don't get it right now, later on you'll get it. And honest to God, with some screen time and experience, you're going to anticipate this on your own, and you'll become an amazing trader. But yeah, team, so far I'm honestly ready for this week. I do want the team to understand that despite us not seeing a lot of big candles like directional candles on the daily time frame, if we look at the weekly, so far it looks like the trend is continuing higher, and we can head towards 525 and maybe even 527. We are at 70%. We're at 76% on the weekly time frame, which means we are at melt up operation levels where this can continue to melt up for another week at the very, very least. There's really not any big data that can affect the markets. We do have Powell speaking, but there's not really much else that can affect the markets. And I think with the narrative change that we had, I think we will also see that within the Fed speakers. We have some Fed speakers this week throughout the week, but I think opposed to how it was bad news back then, I think it might be good news now where the market will benefit to the upside and catch liquidity that way. But now that we saw SPY, as we can see, SPY RSI is definitely much more bullish than QQQ. If I show you QQQ on the weekly time frame, we have the same thing here, team. So the level that we were looking at on the daily time frame is similar to that one. So the reason why I mentioned us being careful and pretty much looking out for this opportunity is because the same way here. So you see how bulls tried to kind of break out and they failed. They came back down, retested that support level, and then had a much more healthier upside. So I'm saying that if the same thing happens here, we can expect the same to happen. But if they do break above 446.40 tomorrow or into Tuesday session, this is going to continue to lead to more upside, and I think QQQ will get at least 2 to 3 more weeks of upside. So above 449.34, that is confirmation that bulls have the control, and the rotation is going to continue to flow into QQQ stocks. Consumer confidence on Tuesday and GDP on Thursday. Yes, sir. Let's see how that goes. I think I think the market so far, the way that they have been digesting, bulls don't look too bad at all. If they break 446.40, the party goes on and bulls can continue to push higher. And team, look at these two beautiful wicks right here. This is right here. I love this because this tells me if we go into Monday's open, right? And oh, sorry about that. If we go into Monday's open and we consolidate well above 446.40 on the 5-minute time frame, then I'm instantly going to target 449.30, and I will make sure that I even beat the algo systems, because as soon as price holds and they break that small digestion on the intraday 5-minute time frame, algos instantly know that this is going to be the target, and a lot of times we would see that breakout fast. Um, we'll see how it goes, but so far, team, this is what I'm looking at for the continuation to the upside. And again, why are we bullish? Why are we looking for further continuation? Because the market continues to remain bullish. This is, again, these are the supply candles and these are the demand candles. We are overwhelming bulls, and with any good news that the market gets, this can continue to go higher. But yeah, team, so far, this is what we are looking at now. Let's see, we have covered SPY, we covered NVIDIA, we covered, okay, so let's cover Apple here. Now, team, this is Apple on the weekly time frame. Apple has a potential bull flag formation where we had established support right here, and then we further confirmed support now with a nice demand here. As we can see, despite all of the bad news, the stock continues to see demand. So if we do see, what I'm honestly waiting for on Apple is more data. So if we do see that bulls continue to be resilient and they break above 178.53, that's very, very bullish towards 186 right away, 187. And then from there, we will expect 197.41 predestined target resistance line to be tested. And from there, consolidate for a big breakout from this bull flag heading into 2025. Or perhaps at the end of, we will start to break out at the end of this year. and continue to break out into 2025. So this is a stock that I'm watching for opportunities in the near future. We are in some positions, so I will be watching this one, team. I'll continue to watch it, but so far this is looking good. I think it's just a matter of time from here. Um, so yeah, this is Apple. Let's go to the daily time frame as well. This is the daily time frame. We had a big supply bar, and bulls were not able to confirm it. We have a potential bullish harami. So let's see if bulls can step in and absorb that supply candle over time. If they absorb that supply candle over time, that's going to be very bullish towards 183, and from there, it's towards 189. Let's take a look at so I'm not sure if Rain Bond mentioned this one, you guys, but I'm possibly looking at Chewy here. Chewy has a bullish divergence, as we can see, a nice bullish divergence here where relative strength index is increasing, but the stock is coming down or consolidating. So I think this is a good accumulation, and once we break above the 20 EMA line at 17.27, I think the 20 EMA will start to slope up, and that will bring in more algo buyers towards the 200 SMA line at 23.67. Our main target is 25, and I think once we break 25, this will finally go back to an uptrend. But I'm watching this one, you guys, because we had earnings, and earnings could not bring the stock down. So far, they're holding up, and last time they did that, we saw some nice upside. So will we see the same thing this time? I'll be watching Chewy, you guys. I see Chris said that he's holding Chewy Leaps. Nice, nice, nice. I was looking at Chewy Leaps. They're actually they're very cheap, you guys. So let's see, we can look at the 22.50 call trading at 4.45. I think that's a good contract. We can even, and keep in mind, team, that's for January 16, 2026. This expires in 663 days from now. So that's a great contract to pretty much hold, especially if you have a big account. Now we discussed Chewy. Let's go to so yeah, team, we discussed Amazon too, right? Amazon has a bullish ascending, and so far Amazon's looking really good. The way that I will be trading Amazon is team, here's how. With the stocks that we mentioned heading into Monday and Tuesday session this week, have them open on your chart, have it set up the way I have a weekly watch list specifically for your weekly watch list, like a watch list set here just for that, and pay attention to those stocks into Monday and Tuesday's open. If you see that they are showing strength and they are digesting that strength, that's a clear bullish sign that the stocks are going to continue to see more upside because they're bullish momentum trades. They're going to see expansion. All right, team. So far we have covered about everything that I wanted to cover, and here are the market inverses, you guys. VXX, it's definitely starting to see some buyers, but I would like to further see more. I'd like to further see more on VIX. And the way that I trade VIX, or the way that I hedge with VXX, probably will hedge with VXX in the next 2 weeks is, team, let's say you're trading shares, right? Let's say you are buying uh Meta shares or Amazon shares, and you're trading the market that way. You're day trading, or you're short-term swing trading the market that way. What you can do is the way that I like to that I like to intraday trade is I would buy that share to day trade, and then I would also pick up VXX shares as a hedge. And pretty much when the market comes down, let's do a side by side comparison. When the market comes down, what will happen is VXX will shoot up. So let's say I'm holding Amazon shares. So if I'm trading Amazon shares, and let's say where was this? This was on Friday. So Friday was right here. That's interesting that they both go up, and sometimes it's like that, team, and that's perfect. So in this case, we can see they both go up. So what I would do is like I would buy Amazon, right? I would buy Amazon here, and as a day trade for Amazon shares, and as Amazon goes up, I have, let's say, 20,000 or 25,000 worth of Amazon shares. As it goes up, I would make around $350 to $400 or something. And with VXX, I would also buy VXX shares. And what would happen is I would lose about $150 on this one. Now, it really depends. Sometimes I would just cut losses and just get out right away. And I would still remain positive because I remained hedged and I made profits. And then there's times where you will literally see, as soon as you take profits on Amazon, VXX will shoot up right after, which is really awesome, which means you will recover the 150 negative 150 and even go green where you'll make like 200 to 250 profit. I used to love day trading that way, and I think it's very safe. I will start to be a good example for the team and trade that during live market hours. But yeah, you guys, this is a good idea if you want to trade. If you want to intraday trade with, let's say, shares, while also trying to hedge with something that can back you up on the downside. So I would buy, let's say, $25,000 worth of Amazon shares to day trade, and I would do, let's say, 15,000 of VXX or something. Um, and that would work out pretty great for me, you guys, honestly. Um, all right, so I lost a lot with SQQQ. So, team, I do want to mention that VXX is not something you want to keep overnight, okay? VXX is not something you want to keep more than 3 days because they're triple leveraged, and this means that they try to track. For example, this one, I'm not sure what. I think VXX is the same as VIX, the same function, but it pretty much it tracks the it's like a fear index for the SPX. It tracks the contracts for the put contracts for SPX. So if the put contracts on SPX, which is the S&P 500 index, if they get a lot of volatility, let's say they get a lot of IV, a lot of premium, then this increases VXX and VIX greatly. What are your thoughts on net? Let's take a look at net here. Whoa, net had some nice upside heading um, into so far. Net looks like it's had a good consolidation. We filled the gap over here, and honest to God, it looks like a good stock. Definitely does not look too bad. It's been in this digestion, so this might be a week where we could potentially expect some upside on this stock. So the way that you can trade net is this: if bulls get above 96.76, you can enter a bullish call for a net with, let's say, always give yourself time. Always make sure you give yourself time. And what happens is if they pretty much if they continue to advance from there, you use this one as your confirmation that they're going to see more upside. So above, if they engulf the wick of that candle at 100.77, you would expect the next target, which is the predestined target at 110. And from there, if they do break that, you use this wick as confirmation for more upside. But so far, this looks like a potential bullish engulfing. They almost had a bullish engulfing, and I honestly, I don't see much wrong with it. So the setup definitely looks good. Let's take a look at some options. So if I were to trade it, if I were to trade it, really depends on how you would want to trade it. Um, this contract here for June is definitely expensive, but if you have a big account, the 105 call looks good. Or if you want, you could pick up the 110 call, but that's a bit far out of the money. This one I would only hold it for about a couple of pretty much for about a week or so, or a week or two, just to benefit from the premium increase, from the, let's say, 60 to 80, 90% premium increase. The May contracts also look good. But I honestly, like, with the May contracts, this would be like trading something aggressive. This could be good too, but more for day trades. Yeah, so the May 17 would be more of a day trade where you would sell before the end of the day. So far, it looks good. Net definitely looks good. It's in an uptrending market. The 20 EMA just crossed above the 200 SMA line on the weekly time frame. And considering how well Amazon is doing, I think this can continue to do well. Looking at June 19, 95 call. June 21, 95 call. Oh, you're talking about deep in the money call or at the money call, almost in the money call. Yep, for sure. Whoa, that could be a good one too. Honest to God, this could be a good one too. If we get let's say a nice $10 move, that contract gains at least 60%. Team, is there anything that you would like me to look at, by the way? Can we check Meta? All right, so our team are requesting Meta. Let's take a look at Meta here. Meta also, Meta has a bullish engulfing on the weekly time frame. So, so far the stock is bullish and can continue to see more upside. So, you can draw your resistance line here for Meta at 514 as the first target if bulls do show up on Monday. So if bulls do show up on Monday, we can expect 514.77. But if we do see weakness on Monday where we are unable to push up and we have a small, let's say a candle like that or something, a weak candle, then we can expect more, pretty much some downside on this one for consolidation. But taking into account how we have been consolidating here, this can potentially see more upside. So I'm personally, I wouldn't. I mean, it looks good, you guys. I don't want to say that it looks bad because tech is getting momentum, but it's not one of the stocks that I'm personally watching. But still, it looks good, you guys. I do want to say it looks good, just not one of the stocks I'm watching because I had much better opportunities on this stock. I've made great profits on this one, and I'm liking some other setups better within the SPDR sectors, which for one, Amazon and Nvidia, and even Meta, if sorry, even AMD, if AMD shows some strength. So, K bro, I saw your LMT in the stock requests, and LMT's been on a nice grind, you guys. LMT's definitely been on a nice grind. I'm not sure how things will go from here. Um, but so far, bulls have a nice demand candle, and the fuel is definitely there. They have earnings coming up soon. Let's see how this will go. So far, they definitely have they have a demand candle, and they could see another move towards 454.17 resistance for the next 2 weeks before heading into earnings on April 16. So far, the stock is definitely getting momentum. Hands off on Lulu. Now, team, with Lulu, we have two Lulu shares, and um, we are down a good amount. We bought the shares at 456, and now we are trading at 405 because the stock had a pretty much a surprise bad earnings reaction. And I looked into their earnings. They really didn't do bad. They beat earnings, they beat expectations, but they had a soft guidance, and that in turn led to some downside. But if we take into account um, the lower rates into the future and the inclusion of Lulu into the S&P 500 recently, I think this is an amazing opportunity, and it is going to get picked up by pensions for the future. So we will be buying 2 more shares or 3 more shares of Lulu here. And from there, it's a waiting game. We are going to hold long term for pretty much for Lulu to continue to head back up towards 516 and see more upside from there. So yeah, you guys, considering that we are in an uptrending market, the RSI is at 30%. So the last time we did this, the stock got dip bought. We may possibly see the same, where we just see a recovery back up with time heading into the rest of this year. We will be picking up 2 to 3 Lulu shares sometime this week. Now we could have bought it. We could have bought it cheaper, you guys, but I wanted to wait it out a little bit more, and unfortunately, the stock really had a good recovery. But all good. Google now, team. Regarding Google, although I got out on my contract, this is another stock that can push QQQ higher. The stock is definitely looking strong, just like Meta, actually stronger than Meta. This one pretty much had a breakout. I can even do this to match it with the prior resistance, and we have a break above resistance. So I think this can continue to go up higher, and the way that you can trade this is like you can use these wicks as your confirmation. So if they do, let's say you're watching it on intraday, if they break above the wick at 152.88, then perhaps you can continue to anticipate more upside towards 155, or yeah, even towards this gap fill here at 153.007 that has yet to be filled. I think bulls still have momentum to see that upside, especially considering that we did a deal with, Google had a deal with Apple. They just announced an AI deal with Apple, and I think they did a partnership with Apple, and I think this will greatly benefit the stock's price from here. So on Google, I think we can see more upside. We are definitely crazy overbought on the pretty much on the smaller time frame, but within the bigger time frame, the trend continues to go on. I think this week we will see another green candle above 152.88 towards 153, and then 155 area for Google. For Oracle, I'll do Oracle really fast. So far, team, did I do a good job explaining? Did we do a good job explaining what can be expected heading into this week? Can the team give us a quick summary on what can be expected in the markets based on our analysis today? Whoa, Oracle looks good, you guys. Oracle, honest to God, this could be a good dip buy for Oracle. This could be a good dip buy for Oracle here heading into. So the contract that Rainbond had, let me see, what contract did she have? I believe it may have been the 140 call or something for January 17, 2025. Anyone remember what contract that was? So I see Oracle contracts are not losing a lot of value. But team, um, for Oracle, the 150 call, no, I think that's way too. For some reason, contracts are still way too overbought. The contracts are definitely way too overbought. Um, but let's see if we can find something else short term to go with the momentum. So considering that we would expect a green candle to come back up to 132, let's see if we can find something around that strike that will give us some good momentum. So maybe we can do July 19, 135 call at 5.0 premium. This could be a good trade, you guys, heading into this week. We could pick up this contract and pretty much sell a week or two from now for some really nice profits as we come back up. Fill this pretty much fill this candle, fill this wick with a green candle, and see more upside from there from this possible bull flag breakout. We took out that supply candle. So despite this candle selling off, this could be an opportunity for the move back up towards 132 for the next 2 weeks. So our team says snow. I was looking at snow, you guys. I'm a bit conflicted here on snow. I'm glad I picked up shares and not options contracts, but we are still holding this bullish channel. If we can continue to hold this, this bullish. It's a bullish ascending formation. We are seeing higher lows here. So first we saw a higher high here. This high was higher than that high, so that ends the downtrend. So the fact that we ended the downtrend, can we see this as a higher low? So this was a low over here. This is a higher low. This low is higher than that one. So that's a bullish, bullish signal. So can bulls get a nice demand candle here and come back up towards 184 and especially regain 193? That will be very bullish. If we get back up above 193, I will find that very bullish heading into the future for a high above 236, and then the next higher high will be all the way around 293 on snow. So uh, I'll continue to watch snow here. This is going to be a very critical week for snow. We need to see this. We need to see the next 2 weeks getting above 167.66 to signal that this is curving up the same way that we saw it here, the same way we saw it here, the same way we saw it there. So this is what I will be watching for snow. I will use this wick here as confirmation. If they can get above 168.49 on the next weekly candle that will show up by the end of this Friday, then that will be bullish to me for a move back up towards 193, and then even towards 215 as the main target. I remember having the 120 call. Oh man, oh man. That's for Oracle, Mike. We had some nice discounts even on IWM. Man, IWM, we had it at the very bottom, you guys. Needs a bullish engulfing this week to complete that evening star. Yes, sir. Yes, sir. Yes, sir. Oh wow, Chef Mike, I do remember that when we had that big gap down and we were heading towards the gap fill. Let's see if I can find it on the daily. Yeah, right over here, right around 107. Looking back at it, you guys, amazing how they just, like, as soon as the stock did well, they just gapped up all the way to exactly where resistance is. How amazing is that, you guys? It was like it's predestined, you know? Um, team, any questions so far? Any questions about today's analysis so far? Oh, thank you so much for reminding me, Ivan. So, for those of you that are part of the Zero DTE account, Zero DTE challenge, I just want to share that. Um, I just want to share that. Thank you so much, attendees. Thank you for attending. Um, Team, I do want to share that I have my account ready. Let me see. I believe I shared it somewhere up here. Oh, it looks like I haven't shared it. Maybe I shared it in the chat room. Um, Oh yeah, there it goes. So I have the Zero DTE account ready. I have it funded with $300 on Webull, and the reason why I have it funded on Webull is because I would like to do the same thing that Chris is doing. Chris and some other some other on our team. I know you guys. I know some of you on TOS feel betrayed, but please don't feel like that because TOS is incredible. I assure you, TOS is incredible, and you will see me trade on there as well. But there we go. I found it. So this is on Webull, you guys. This is why I'm doing the Zero DTE challenge on Webull, because I get to see this with the team, and I would like to help work on the team and bring awareness on risk management. So team, I do have some extra time, and in the extra time that we have, I really would like to go over risk management if the team doesn't mind, because risk management is very, very important. It's very crucial. Like, I remember I used to be very stubborn, and it's just absolutely mind-boggling how where I once was and where I stand now. And this is because I have come to the conclusion over the last 2 years that risk management is the absolute delta of success in the finance world. So without risk management, the market is eventually going to get you. So if I bring the concept of risk management to you, the awareness of risk management, even if you are a new trader that just joined us, you're going to be on an amazing journey up ahead, and you don't have to go through any of the mistakes that I went through, or probably many others on our team went through. But yeah, team, this is a zero DTE account, and this is pretty much the day to day on Weeble, and this is why I'd like to do it on Weeble. So I'm very excited. The funds have already By the way, Ivan, I was laughing so hard when I saw this when I saw this meme here when you posted that. But yeah, you guys, I'm very excited for the zero DT, honest to God. And same with the 2K cash account team. Um, please just hang in there, you guys. I owe a lot to the cash account team, and I swear I am not ignoring you. I'm not. Just please hang in there, because I really, more than anything, I miss what we used to do in the 2K cash account. So I'm very excited whenever the market gives us an opportunity. As soon as I'm back, I'm not going to go away this time. No matter how bad we fell, how much profits we give up, I will not. I will not be discouraged, and I will not take a pause. So, um, yeah, you guys. So Weeble allows us? No way, Bahar. When is that? When is that? Because if that's so, I really would love that. If Webull provides two accounts, I'm going to transfer. I'm going to try and transfer like 30 there. Can't have two cash accounts. Yeah, I figured. I see. Hopefully they do someday. Hopefully they will add someday. But team, let's quickly talk about risk management. So why is risk management so important, and what is risk management? Now, I don't have a note that I'm reading off of. This is going to be at the top of my head, and I will try to just use the concept of it first in simple terms, so that our team get a good understanding of what it is. Once you have a good understanding, then you can try to fill your own with your own details. Now, before we discuss risk management, just note that there is no perfect system. Okay, there is no firm system like, oh, you know what, I will just copy this, this individual or this, because everyone's risk management is different. Okay, everyone has a different appeal for risk management, a different tolerance, and the safest, the better, you guys. So risk management is pretty much, it's something that, um, not all investors. Let me just say this in a better term. Risk management is the only aspect within the investing that all successful participants have in common. All, again, and not the failure ones. We're talking about all the successful ones. There are limitless strategies in the markets. There are investors, there are pensions, like there are all sorts of participants in the market that participate in all sorts of ways. Institutions that pretty much hedge, or hedge is another aspect of risk management, that use risk management in various aspects. And pretty much there are limitless strategies of how they do it, but they all have something in common, in that they all apply these risk management aspects, these risk management tools, to limit their losses. Because there's I saw a quote the other day, that actually just stood out to me right away, and it's that, you have to be the best loser. Like, how do I say this? Like, what do I mean? Like, what do we mean by you have to be the best loser? You have to learn how to manage your losers in the best way possible. For example, let's say a trader who waited for me, right? Who waited for me, which is amazing. Um I take responsibility for the fact that I have been on a pause for the 2K cash account. But my point is, a trader can pretty much, let's say, um can give up after the Tesla loss, right? And another trader will learn from that, like Connor, and will come back all the way to break even, and then take that implementation into their new trading. So it's just so amazing, you guys. One way or another, there will be failures on our way, but it's the way that you respond to them that is going to be key. Are you going to make the same mistakes over and over again? Are you going to continue to trade zero DTEs on let's say risky trades on Friday with big sizable positions? Are you still going to trade the speculative nonsensical movement on Fridays and give back your gains? These decisions will really save us as participants in the market. So with risk management, here's what we want to do. We want to pretty much we want to have not a lot of we'll come to this, but for now I'm going to go down in a list. Okay, so the first aspect of risk management, so I'll just type it here. So risk uh management aspects. So we have stop loss. Okay, now everyone knows about stop loss. Stop loss is basically it's where you have had enough. It's where you have pretty much you have hit your level of you have hit your maximum amount of how much you want to lose. So if investors, traders, participants will have a stop loss on their position, let's say Tesla. So if we look at the market really fast to use stop loss, so let's say that I'm going to enter what is something that we should look at? Let's say that I'm going to enter not SPY. Let's take a look at Amazon. Let's say I'm going to enter Amazon. Let's say I will enter Amazon on this day here at 178.90. I will enter a bullish call above that level, which is the prior day high and the prior day close, and I will have my stop loss right there at 177.85. So with my stop loss at 177.85, as soon as price goes down there, it's going to throw me out of the trade. Why is it going to throw me out of the trade? Because the trade is no longer going in my direction, and that limits my losses. Because if they pretty much fell back down below the prior day high, the prior day close, which is 178.87, then this means that this trade, this is a sign of weakness, and that we could see more selling. Now, when do I get back in? Once we get back right above there. So this stop loss here ensures that you don't lose a big amount. It limits your losses from getting bigger. Now, team, um, a lot of you try to set your stop losses on, let's say, like zero DTE trades and all that kind of stuff. And I think that's a bad idea. It's not really a bad idea. I do want you to have a stop loss, but it's a bad idea in the way that some of you are setting your stop losses, because it means that you are going to see a much higher probability of getting your stops hit because of the way that the market collects these liquidities. So the way that I would prefer that you have a stop loss is you watch the zero DTE class on our website, and you take into account why we trade the way that we do. So if you look into why we trade the way that we do, and why we would have sometimes, like, let's say I enter at 0.54, right? If I enter at 0.54 premium, then my stop loss would be at 0.40 for some trades. And so in that case, like, I will tell the team, I will be very firm and tell the team, if it goes below that limit at 0.40, or as soon as we go there, cut your loss right away. Now, why do I say that? Because at some of these times, it's better for us to get stopped out, because usually what happens is, like, one candle on the 5 minute, one candle or 2 minute, one candle or two candle on the 5 minute, which means 10-minute duration, is going to decide what will happen between like within a digestion level or something. So sometimes we will be waiting for that candle, and then we will get that candle, and we will enter on that candle just to see it kind of break down after. Now, when I say team, my firm stop loss is at 0.40, I really mean my stop loss is there. It's not there for decoration. It's there for a reason. It's there to be cut so that it's there to minimize our loss so that we enter on a better contract. So what do I mean by we enter on a better contract? When price pulls back, instead of us getting in on, let's say, instead of us remaining on the 517 call when price is now back down at 516, we will buy, sorry, 515, we will buy a closer strike, let's say a 516 call that'll be just 25 or 30 cents away from our strike. So and we will get that for very cheap because of the way that zero DDEs work and the way that the options the pretty much the derivative itself works. So team, do you see my point? My point is you can't have a stop loss for all trades. Now you're going to ask me, wait a minute, you're telling me to be careful on my risk management, but you're telling me not to have a stop loss. Yes, yes, yes. This is what I'm telling you. I'm not telling you to not have a stop loss for that one. Essentially, I'm telling you that a lot of traders think that the stop loss is going to save them, but no, 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 no. It's not the stop loss, team. It's the position sizing. Okay, so this is where I want you to be aware. This is the most important part to me, because what I want you to do is, regardless of how many swing trades that the admins send out, let's say I send out 2 to 3 swing trades, Rainbow sends out 2 to 3, Roger sends out 2 to 3. What you would want to do is you would want to grab one of at least two of the traders there, and that's it. Like you would want to trade 1 or 2 contracts at a time. And why should you trade 1 or 2 contracts at a time, team? Why should we trade 1 or 2 contracts at a time? The reason why is because we are protecting our basically we are limiting our position sizing. So by limiting our position sizing, if we have, let's say, 3 positions, four, or if I grab 2 positions from Rainbond, 2 positions from Body, 2 positions from Roger, I'm going to have 6 positions in total. So my risk management now is over the roof because I have 6 positions of the same that can affect me horribly. So even if I have a stop loss at 25%, I'm going to lose 25% on each contract that is going to amount to a big loss. Do you guys see why stop loss, why position sizing is so important? So team, do you have a good understanding so far of position sizing? Are you getting what I'm trying to get out there? What I'm saying is, instead of us having like so many positions from our team, I want you to cherry pick the best ones. Cherry pick the best ones and stick to just a few trades at a time. That way, you continue to pretty much, and you're not going to remain in a trade where the admin has moved on from it. Let's say, months and months ago. And we will also avoid the mistake of having any of our team ever averaging down on one of our losses and just biting down on it. We don't want any of our team to do that. The reason why is because this will breach position sizing rules. So, team, uh, position sizing is very crucial. Please don't forget that, okay? Position sizing is a very crucial aspect of risk management. And let me explain why this aspect is so important. A trader can make 9 trades, right? A trader can make 9 winning trades, and each of the trades, the trader will take 30 to, let's say, 50% profit on each of the trades, right? And then on the 10th trade, the trader ends up hitting an imminent loss. Now, again, team, losses are imminent in the market. We have to become good losers, just like how we become good winners. We have to manage the losses really fast. When I say be a good loser, I don't mean lose a lot and get yourself out. I mean, just when we lose, we improve on those losses and we try to have a system for it so that it's less on luck and all of that stuff and more on the probabilities. I mean, luck, when we deep dive into luck itself is a is the laws of attraction uh for uh for probabilities. But you guys, my point is, if we do this, this will save us so much. This will avoid anybody from pretty much. For example, like, I'll give you one of my loss, right? I'm not saying it's going to be a full loss, like, um AMGN. So with AMGN, I don't want our team to be adding, let's say, 15 to 20 to 30 contracts on AMGN. Because going back to the example, a trader can win 9 winning trades in a row, securing 30 to 50% profit, and then on the 10th trade, at pretty much at the only time that they hit a loss, instead of skewering the loss at, let's say, 30%, the same way that they skewered the loss at 30% or 50%, sorry, skewer the profits at 30 to 50%. If they just had done that, they would have been perfectly fine, and they would have had an amazing gain still left on the table, giving back that very small loss. Instead, what the trader does is, they will add, let's say, 5 positions. They will average down 5 contracts. So now, instead of the negative 30 loss, the trader ends up adding 5 contracts, um, amplifying the amount of loss from that trade. So when you add 5 contracts, now you can lose 6x, basically. Like, you can lose 6x in one trade, opposed to just one contract, because you have amplified the position by 6. So when you do that, and then it goes down even more, you get more emotional, you get more tunnel vision, and now none of the rules matter to you, because you already broke a rule, and now you're just trying to fix things. Now you end up adding 4 more contracts, and now you have 10 contracts, which is about the 10 wins that you got in your prior trades. Now, all of those 10 wins are going to be wiped out in just one single trade, because we amplified our losing position by 10x. So instead of cutting the position, we amplified it, and now we are losing 10x. So despite having a 90% win rate probability, one trade ends up pretty much wiping out the whole 9 trades. Is that fair, team? Is that justified? No, right? So because it's not justified, we don't want to do that. We don't want to mess up our probabilities by these flaws within risk management. So pay attention to risk management, build a solid system on risk management, build a structure on risk management, and watch how amazing you will become. You'll end up closing in on the flaws, like the gaps, and what you'll end up essentially doing is pretty much increasing your probabilities, because you're closing those flaws. So this is one of them that I wanted to bring awareness to the team, because I had the chance, since we had a lot of traders attending today. So so far, do you have a good understanding of that, team? Have I done a good job on bringing that awareness to you, so that even if you are a new trader, you don't fall for this? Now, team, do keep in mind that there are traders out there who have done this, and they have made devastating mistakes, horrible mistakes. They have blown their accounts. They have blown their hard-earned savings through years of even retirements or whatever. And it's very, very bad. We don't want anyone on our team making that mistake and finding out the hard way, because that is the reality of where this can go to. So take it easy, focus on the winning, and I promise you, over time, you are going to beat the markets. Because here's the thing with options trading: if you manage your risk, you can only lose what you put into that, but you can win far above what you put into the trade. So let's say you can put in $150 into an options contract, or for 0 DTs, we can put in, let's say, $35 into it, and that's all we can lose, but we can gain $200. So this is very important, you guys. I wanted to bring that for the team. So we talked about stop loss, position sizing. What's another aspect of risk management, you guys? Another aspect of risk management is hedging. So, what is hedging exactly? Hedging is what we discussed here. So, um, let's say during the day I'm trading Tesla stock, right? Sorry, not Tesla. Let's just say yeah, I mean Tesla, anything. Let's just say you're trading Tesla, right? And let's say um you wanted to buy Tesla at this here, you wanted to buy Tesla shares right there as a day trade. You're day trading it. You just want to make your morning trade and make some nice profits so that you can walk away for the day with $200 or so. And you pretty much made your daily money, your whatever from the market. So let's say you just want to do that and you buy Tesla shares right there, and the market that day is very volatile. So you're going to take advantage of that by buying VXX shares. So how will this work? You're going to buy Tesla shares at the bottom there, and you will also pick up VXX at a nice level, of a discount. And what will end up happening is, like, let's say it goes up a little bit, right? Because the market dropped right at the opening session. What will happen is we will go down. So once we go down, you can buy VXX shares right there. And just as you profit from your Tesla, you make, let's say, $250 to $300. You may lose about, let's say, $100 or so on your VXX shares. And what happens is you secure your profit on Tesla, and then a lot of times, um, not only will both of them be profitable at the same time, but VXX may come down and even give you back some of the. Sorry, VXX may go up and even give you back some of the hedging that you got. So what you're doing is you're hedging your Tesla position with VXX, which is the XPX volatility index measurement. And you're basically like, as soon as the puts gain a lot of IV, you're benefiting from that. You're hedging yourself against that, and that keeps you that pretty much that gives you sort of a positive delta to keep you safe. So this is a hedging. This is a way of hedging. Now, another way that you can hedge, or you can think of a hedge team, is like an insurance, right? It's an insurance for. And team, I do want to note that VXX, SQQQ, TQQQ. These are all triple leveraged, and they calculate certain indexes or whatever instrument, and they're not good to hold. Okay, you do not want to make the mistake of holding leveraged shares um, longer than 3 days. Okay, you never ever want to do that. Please do keep that in mind, because leveraged shares continue to lose value opposed to actual equities. So please keep that in mind. Okay, they don't do a good job of calculating that. And yeah, so you always want to take that into account. These are all for intradays or overnight volatility opportunities. So yeah, another terminology for hedging is insurance. Now, Roger, our admin, calls it insurance. So you can see why he calls it insurance. It's pretty much like, oh, okay, you know what? Since I have a house here, I'm gonna buy. Let's say I'm gonna have an insurance on it, so that in case if the house, let's say something happens to the house, I'm going to be covered. And it's the same way, the same concept for that. So what they will do is, like, let's say on Nvidia, a big institution will get into Nvidia, right? Because they believe that Nvidia could see some heavy upside. What they will do is, like, they will buy Nvidia, and they will hedge with some options. They can also do this as well, team. They will buy Nvidia calls, deep in the money Nvidia calls, and what they will end up doing is, like, let's say, buy a very cheap amount of put options in case the stock goes down. It is possible for them to do that. Or what they will do is, like, they will short something else that's weak, and pretty much hedge things out that way. So do you guys have a good understanding of what hedging is so far? So it's like having, if you have, let's say, 30 shares of Nvidia, maybe you're going to have like a cheap put option, so that it behaves as a hedge against your long position. So far makes sense, team? So again, we have stop loss, we have position sizing, we have hedging. Can the team give us one more here? One last one, and we are done for the day. Bahar, that's so true. You're gonna see them both green at the same time or both red at the same time. Horrible. All right, so we got stop loss, position sizing, hedging. What was the other one, team? I can't seem to remember. There was one more that I'm forgetting to remember. Um, let me just stop loss, position sizing, hedging. I've been talking for a while, team, so I'm having a brain fart here. I can't remember, but so far, I think I got what I needed to get across the team, and I'm happy with what we have discussed. So far, team, do you have a good understanding on what we discussed, and are you ready for tomorrow morning? Yes, sir. That's just what I'm about to do, Ivan. But I really appreciate our team for being here, and I'm very very grateful, you guys. Yes, sir. Me too, you guys. Me too. I'm ready for tomorrow. I'm honestly very excited, but at the same time, very cautious. Please do keep in mind, team. Now, I do want to quickly go back to the stop loss. For the longer term positions, what you can do is you can have your stop loss at anywhere between 40 to 60% on the longer term positions. Um, and yeah, that's honestly about it. And the best part is, like, as soon as your longer term swing trade positions, let's say, get stopped out, what you can always do is just give the stock about a week to sort this thing out, or maybe about 2 weeks. And as soon as you see the right candle appearing again where demand is showing up, you will get the opportunity to buy a contract that has an additional 30 days on it, and it's probably even a better strike than you were trying to get. So if it was, let's say, 180, this time you'll be able to, because of your stop loss and the fact that you waited 1 week out, you may be able to get one more additional month on the expiration when you get back in. And on top of that, instead of, let's say, the 180 call, you may pick up the 170 call. So, yeah, that's all for me, team. I hope you all have a wonderful rest of the day. Thank you so much for being here. Sorry, rest of the night. And see you all in tomorrow's trading, you guys. Very excited. I will be in the live trading room. I will not miss a day, you guys. I'll be active there. So, see you there tomorrow. Take care. Oh, Brian. Brian, you got it. Thank you so much. You got it, man. Yes, diversification, you guys. That's what we forgot. The fourth one is diversification. Thank you so much, Brian. Thank you for mentioning it before we ended the recording. That is right. Diversification, you guys. That's right. Thank you so much. Have a good night, team. Take care.